Hi everyone, welcome to today's video. So let me start today's video by discussing a very important case study about HDFC Bank. If you understand this important point, there is just one point I'll make. If you understand this point, you will be able to pick a lot of good stocks in the markets right now because something very similar is happening. So what is that case study? Okay, so take a look at this graphic that between 2007 all the way till 2012, HDFC Bank's stock price hardly moved. Now you'll say that, okay, maybe something wrong with profits, maybe something wrong with revenues, maybe some management issue, maybe some tech change happening, vagera, vagera. No. Between 2011 to 2015, the revenues were growing, profits were growing consistently. You will say, what about like 2008, 7, 8 data? Okay, so take a look at this graphic. Again, the revenues, profits were growing. So important point to note, the fundamentals of HDFC Bank were very strong, but it was not translating into the stock price. You'll say that, okay, this is probably one isolated example that you're picking. Can you talk about something recent? 100%. So take a look at ITC. And this is something that we have lived with this story over the last 3-4 years. Literally, memes were being made about ITC. A lot of good investors abandoned ITC. Ki kabhi badhega hi nahi stock, this, that. And now ITC has started to give a run up. Again, same thing at play. Take a look at revenues, profits over the last 3-4 years. You will see that constant growth in revenues, profits. Good company, nothing fundamentally off. I have been one of the supporters of ITC when everyone was trolling ITC. I was making videos on it, buying more ITC. I sold it off at 290, 300 levels. That's a separate issue, but I made a lot of money in that process. So the entire summary that I'm trying to present today is that right now something very similar is happening, but their stock price is getting beaten down. So today I will speak about 5 such stocks. There are multiple such other stocks which I speak about on the Wisdom Hatch community. It's a community of investors that I have built. I give my own flavor to stock investing. So this is a wonderful community that I have built. In case you would like to join it, the links are in the description box. This is not a stock buying recommendation guide. Please do your own due diligence. I am just explaining whatever I am doing in the market. The first stock at hand that we will quickly speak about is Indigo Paints. So Indigo Stocks has been a multi-bagger stock, so to say. It has given wonderful return to investors over the last few years and has been one of the most talked about stocks. But unfortunately, recently the stock has corrected by a lot. How much? Let me take you to the graph and explain it. So from its top, you would notice that the stock price has corrected by roughly 68%. So many of you would say that, you know what, this is just a horrible stock. There is no point in even thinking about buying it. Okay, so I will leave that decision up to you. Again, this is not a push from my side whether you should be buying, selling, but here are some key important data points that you should know. So the first prime reason why Indigo stock fell quite aggressively was that one of its backer, which is called as Sequoia Capital, sold its stake on a block deal, and as a result the stock corrected quite aggressively. Second could be the large market correction that has been happening, so the stock fell quite aggressively because of that. Third is the competitive nature of the industry. So recent announcements were made that, you know what, a company called as Grasim, it is a fairly big firm, it is trying to build its paint business, and it is being estimated that Grasim is going to take away the market share and it is going to hurt a company like Indigo Paints the most, because Indigo Paints right now is a fairly small unit, and if big company like Grasim enters into this space, maybe it will not hurt Asian Paints as aggressively as it would hurt a high growth company like Indigo Paints. All these are valid concerns, and because of this, the Indigo Paints stock price has corrected. One final point here is that Indigo Paints valuations were very aggressive, so they have already been crushed by 60-70% as I showed you the graph, and maybe they will correct a little bit more. Now to what point they will fall, neither I know it, neither any analyst knows it. Everyone keeps on giving their commentary that, you know what, this stock is going to fall to this particular level. No one can estimate that. I am being very, very honest, candid with you. So here, the first key point that you need to understand is about the growth rate of the paints industry. So the growth rate of paints industry is not very attractive. So it is growing at roughly 3%. So that is half the growth rate at which the Indian economy is growing. So this industry as a whole is considered to be a slow growth industry. So you'll say that, yeah, slow growth industry, Grasim is also entering, competition is increasing. So what's the point? Okay. So the point is that the paints companies are smart. For example, consider the case study of Asian Paints. What Asian Paints is doing is that they are entering the home decor market. So this is an entirely new space that they have opened up for themselves. And it is not like a business which is completely different from the paints business. So if Asian Paints is selling you or I paints to paint our house. They can also sell us home furnishing products if the brand value is good. Indigo Paints right now is not doing that as per my understanding, but in the future, nothing stops them from entering these type of industries as well. So this is first key point. The second key and the most important point here is the pricing power point. So take a look at this particular snippet and what you will notice, and this is a statement that I've picked from the MD of Asian Paints, and he categorically said that, you know what, last year we increased our paint price product by roughly 20 to 22%. Now this is a fairly substantial jump, because think about it this way, that even if the industry saturates, it does not grow. Only similar number of people are buying paints, okay? But what if you can increase the price of that product by 20-25%? That yes, then maybe the number will remain the same, but the overall value of the industry will go up. So if Asian Paints is doing it, then it is very likely that going forward in the future, Indigo Paints is also going to do something similar. Now comes the third and the most important part is that the real estate development is slowing down. Does it mean that real estate is a bad sector to invest? Probably topic for another video altogether. But right now what is happening is that builders are not taking loans and constructing more buildings or houses. So therefore you will see an escalation in the rentals that you are paying, etc., etc. And how does this impact the paint industry? Well, it impacts the paint industry a lot, because if new houses are not being constructed, then how are you going to paint them? So this is one of the key reasons why the paint industry stock is falling. But having said this, if you look at the capacity expansion of any of these companies, they are all expanding their capacity. So what does this mean? It simply means that, see, real estate cycle is highly cyclical. It takes time, it goes through a cycle, and every now and then there will be boom and burst cycle in the real estate economy. So as a result, since the burst cycle of real estate is already over, it is very likely that the paint industry will also go up with the real estate cycle. So this is where I'll stop the fundamental analysis of this stock, and I will present a very quick snippet about the technicals of this stock and to what levels do I feel that this stock can rise. Now, if you take a look at this particular graphic, you will see that this is a very important channel for the stock, and it usually trades horizontally in this channel. So therefore, it is very likely that this stock is going to re-enter this channel as soon as there is little bit of positive momentum in the market, and therefore I see a growth of 30% on this stock. What about Asian Paints? I'll give commentary tomorrow on Asian Paints stock on the member community. So now let's move on to the second stock, which is Relaxo. The moment I say Relaxo, you would think about Mr. Saurabh Mukherjea, because he has given a lot of commentary on Relaxo stock, but unfortunately he has sold that stock now. So he's bearish about the stock. What about me? Am I bearish or bullish? So I am bullish about Relaxo. Now you'll say that, do you know more stuff than Mr. Saurabh Mukherjea? No, I don't know it, but I'm putting my own money, so I'm very much entitled to have my opinions, and that is what I'm simply presenting. You can choose to believe it, you can choose to ignore it. I'm presenting my analysis. You can feel free to watch it. You will get a contrary viewpoint, and if you like it, you could probably investigate more and build your own positions and use your own brain around it. So here is what Mr. Saurabh Mukherjea had to say on Relaxo issue as to why he sold it. So his viewpoint was that, hey, the company is losing market share in two footwear categories. One is open footwear and other is sports shoe. So for people who do not know, sports shoe brand is Sparks, I think. And this is the high end stuff, right, that Relaxo sells. And the open footwear is the low end stuff that Relaxo sells, right? So this is where the story is with Mr. Mukherjea. He's simply saying that, you know what, Relaxo losing market share, I'm dumping the share, move on. Now again, I'm not trying to start a debate here. I'm just trying to present the entire viewpoint that there are some stocks that Mr. Saurabh Mukherjea has been incorrect about. For example, ITC. I took a contrary bet than him. I made a lot of money. He sold it at 200, 210, something like this. Second key stock, he cut HDFC AMC quite early, and when it was literally like at the bottom. Now it has recovered quite aggressively since then. Now I'm still holding HDFC AMC, and again, there are like a bunch of stocks that I can speak about, but that is not the agenda of the video. I'm simply trying to outline the fact that Mr. Mukherjea can also be wrong about stocks. I can also be wrong about the stock. Each of us have our own investment thesis, and we are putting our money behind that. Just to help you understand the entire picture, I gave examples. Mr. Saurabh Mukherjea is a very nice person. He came on my channel also. In case you want to check that chat, you can go ahead and check it. I love his investing style. So with that viewpoint in mind, let us not try to create any controversy and move on. So an interesting conversation that I found was of Mr. Dua. He is the lead promoter of Relaxo, and he made some very valid points, which to me as a shareholder looked sensible. So I'll just quickly discuss that. So the first key point that Mr. Dua explained about was that, see, our business is highly cost competitive business, especially the chappals that we are selling. We have to compete at a very low price point because we are trying to compete with a price sensitive market. So these would be tier 2, tier 3 cities, towns, villages. So this is where Relaxo stuff gets sold. And whom are they competing against? They are competing against the unorganized sector. Now, due to the disruption in the supply chain, and he gave a very important example about an input cost material called as ethyl vinyl acetate. So Relaxo roughly uses 1000 ton of ethyl vinyl acetate every single month. So this is very large quantity. And over the last few quarters, the price volatility of this material was very, very high. For example, before COVID, the price per ton was roughly 120 rupees. Then post COVID, it rose to somewhere around 300 rupees. And then it came down to 200 rupees. Now, a company like Relaxo needs a longer supply chain. So they have to order this stuff well in advance. They have to reorganize their manufacturing process. They have to make decisions as to at what utilization rate they need to run their factory, at what capacity, etc., etc. If the prices of a raw material is very, very high, the company can make a decision that, you know what, we'll probably cut production and be done with it. But if the price is uncertain, then it becomes a problem for a company like Relaxo. They do not have a strategy to compete against local manufacturer whose sole goal is to reduce price, because Relaxo's goal is what? It's decent enough quality at very low prices or relatively low prices. But a local manufacturer's viewpoint is what? I just have to bring the price down of a particular product. So the vision gets blurred for a company like Relaxo. So therefore they are struggling when it comes to their low-end product. What about high-end product? Why are they losing market share? Very simply put, that Relaxo started its aggressive marketing campaign. They hired a lot of brand ambassadors, etc., etc. Just before COVID, they were starting to build that premium sector brand. And then COVID came, their production, even in their baseline segment, which is the low-end segment, it suffered. So as a result, the focus again got distracted a little bit. But to cut the long story short, look at the financials of the company. Wonderful, no problem in profits, revenues. So what about the price point? At what discount is the company available? So it is roughly available at 40-45% discount. So from a pricing point of view, I think we have reached a stage where the stock should be bottoming out at this juncture. So that is my theory regarding Relaxo. Now, when will Relaxo's stock price come back up? Okay, the stock price of Relaxo will come back up when their operating profit margin that you can see here, those have been declining, they come back up to these levels. So that is when this stock is going to become rocket. Now, how will this transition take place? Very simple, that this transition will take place when the volume increase happens, right? And their factories operate at almost full capacity, whatever that previous capacity was. So if these positive change happen with Relaxo stock, there is a very high likelihood that the company will bounce back. Now, one great stuff about Relaxo is that generally speaking, Relaxo's product range is low priced. Now, when a company is low priced and it is deliberately making a choice to move little bit high end, it always has that pricing power. Will it be able to exhibit this right off the bat, maybe in like 2 quarters? No, maybe it will take them a year, maybe a couple of years. But if you're holding a stock like Relaxo for a couple of years, then I personally would be bullish about it. So that is my viewpoint regarding the stock. So now comes the third stock, which is Google Alphabet. So Google stock fell quite aggressively last week and I aggregated more of it. I also spoke about it on the member community where I was saying that, you know what, I've been aggregating more of NASDAQ position, etc., etc. I got a lot of questions that how do you buy US stocks? So I'm currently using Vested, which is a wonderful platform for stock investing in the US market. You can definitely build a little bit of positions outside India to diversify your investment. So that is the vision with which even I invest in the US market. And majority of my tech bets are in the US market. Many of you have asked me about the 20% tax collected at source issue. So I will make a community post regarding the same. So okay, over to Google. So what has been 2 primary problems about the recent stock price fall of Google? And if these problems are temporary problems, then the correction that has happened, that will go away or vanish in the next few months itself. So that is the perspective with which I am operating. The first key problem with Google was the mass layoff that had happened with tech companies, and Google was no surprise there that it fired a lot of people. Sundar Pichai got a lot of heat. Even the CEO of YouTube quit, and a bunch of problems are emerging. And whenever these type of problems happen, people assume that, you know what, Google has become a dabba company. That's the end of it. It will fall. It has probably lived its days, and like every company, it is also going to fall. Yes, that is true that businesses do not have a very long lifespan, so to say, and big companies do typically fall. But now I feel that tech, especially tech-oriented companies, they are very smart because tech is lighter. Google, for example, has been building an ecosystem. Please focus on the word ecosystem. The point is all these things combined will improve your product experience, and all of them will be a major part of your life going forward. So I don't think that that this ecosystem can be replaced. If a company had individual product, for example, Ford Motors had a car or a line of cars, so that's an individual product. Those can be replaced easily, but an ecosystem or trying to replace an ecosystem is not easy. That is my perspective of large tech investing. So whenever these large companies fall, so I go and aggregate them. Now, what type of minor problems make a good opportunity to buy these stocks? So recently there was a battle that took place between Google and ChatGPT. So it is the machine learning artificial intelligence program of Google called as Bard, and ChatGPT, which is quickly becoming one of the most talked about products in 2022-2023. But when Google did the product demo, the product gave incorrect findings. So basically, a sophisticated artificial intelligence tool should be able to give correct answer to the questions asked. But in Google Bard's case, what ended up happening was that to a question that was asked, and if you want to read what question was that and what specific answer was given, this is the response that Google Bard gave. And people panicked that, you know what, this is probably a bad compiler, so to say. And in a single day, the Google stock tanked by roughly 7%. Now use your brain. That has ChatGPT never made a mistake. It has made a lot of mistakes. For example, here is one. You can go and check it. If you read about it online, you will see a bunch of mistakes that ChatGPT has also made. So this is a part and parcel with the evolvement of any technology, that it will take time to perfect products. And right now we are in a very nascent stage when it comes to this artificial intelligence game. Now some engineers believe that Google's current product is better than ChatGPT. Now I don't know the exact mechanics behind it because there is a lot of contrary information that you will find. But definitely we can't discount the engineering prowess of Google if they can launch products like Google Map, if they can launch and make Google search engine the best search engine in the world. So from a mass adoption viewpoint, if AI has to get mass adopted, so Google is the #1 company out there that can help this mass adoption of AI. So right now also Google is in a softer condition. It is not as if that Google has given massive run up. There are 2-3 risks that you need to understand. So the first key risk with Google stock right now is the product monetization risk. For example, a lot of money has been thrown in the AI ML space. Every company is doing it. Microsoft is doing it. Facebook is experimenting with it. So this is called as chasing the technology, because if a company does not experiment with the new stuff that is coming in, then as a tech company, you are dead. So you have no other option but to experiment. So they are experimenting, throwing money. But how do you exactly monetize ChatGPT and make it the next massive money-making engine for a company? So those are the questions that have not been answered by any of the companies yet. So this is a massive risk that you have to take whenever you are investing in these type of companies. The second key problem is the internal competition within the tech space, and tech is a winners take all market. Now, what is the meaning of winner take all? For example, if Google is able to build the best search engine, then it is highly unlikely that you are going to use Microsoft's search engine, whatever they build. Same goes for cloud storage, that if Amazon is building the best cloud storage, then probably you might end up using only that cloud storage. So in technology, the concept is winners take all. So therefore, it becomes very important for you to take equal amount of bets on all the large 4 or 5 major tech companies that you have in your portfolio. So don't disperse that. So this is the second key point that I'll say. Now, third key risk factor with Google is that a lot of predictions are being done that the ad-based model right now that we see on Google, or the ad-based model that we see in terms of doing the searches, that will go away irrespective whether Google builds the best AI ML or Microsoft Amazon builds it. Because this thing, when it comes to ad revenues, is going to get crushed and Google is going to get impacted the most. Now, I don't know. I am hopeful that Google will be able to turn around this problem. They will be able to figure out new revenue streams by the use of tech. So you have to trust the vision of the company. So if you align with Sundar Pichai's vision, then go ahead and invest. Otherwise, don't invest. So now comes the fourth company, which is called as CDSL. Now, this is a depository company. For example, whatever stocks that you purchase, it gets deposited in your demat account, and who manages that entire functioning? It is the CDSL. So NSE, BSE are major clients of CDSL, and as long as people continue to trade stocks, a company like CDSL will continue to grow. So that is the basic bottom line or the business model of CDSL. Now, if you strip apart the entire bells and whistles, what is it that you will understand? You will simply understand that as the number of active participants in the stock market are going up and more people trade and invest, CDSL stock should ideally become a rocket. So is that happening? The answer is no, because the stock is falling quite aggressively. And to what levels has it fallen? Let me quickly show you that. So here is the stock for you. And if you check it from the top, it has fallen by roughly 43% and is trading at roughly 52 weeks low. So it has fallen quite aggressively. Now, does it mean that the fall has been arrested and it is not going to fall any further? Okay, so let me quickly show you this part. So here and here you will see that this was a major consolidation zone, and here again the stock is there. Overall the market looks okay. The Adani issue has played out. A lot of negativity has already happened in the Indian market, world market. Interest rate considerations have been done. Russia-Ukraine problem is, so a bunch of problems have been solved. So one could make an argument that it is trading at a very important support zone here, which had previously existed roughly 1.5 years back. So from that particular perspective, one could make an argument that the stock is bottoming out. Now, what is the immediate gain that I see in this stock? Okay, so I am roughly looking at a gain of 16%, because this again is a very important zone where the stock should go fairly quickly if problems get resolved. So if you're looking at a 15-20% gain, this is a fast mover in my opinion. The moment the market recovers or start to give a little bit of breakout above that 18,500 Nifty range, a stock like CDSL is likely to give a run up. Now you will say that, you know what, there have been a bunch of problems with CDSL stock. For example, BSE decided to sell its holding in CDSL, or a little bit of holding. They did it because of regulatory mandates. What you need to focus on is as to how soon the retail market recovery in the stock market will happen. And for this, let me show you 3-4 charts. So take a look at this chart. What you will notice is that the number of incremental demat accounts have hardly grown for the last 1.5 years. For example, you will see that back in November of 21, 3.4 million accounts were added, and this was somewhat of a bullish period. Then it started to come down, and it has never really recovered from that point. Now, why is this happening? There is no specific data available to India only, but in the US, it is formally established by looking at data that the activity of retail investors is at an all-time low. This is a very important revelation. It means that the retail confidence in the stock market, as it has been over the last 3 years, it is now in the last 3 years has been at an all-time low. And this you can fairly understand by looking around, talking to people. Everyone is very bearish about the markets. So this point can be fairly understood. Now, if this is indeed the case, then what is likely to happen? That if the Indian retail sentiments have been bottomed out, so if something has fallen and if you throw the ball on the ground, it will hit the ground and then come back up. So something similar is going to happen when it comes to retail investing, in my opinion. And the moment this thing happens, the CDSL stock will give a roughly 17% run up. That is the vision with which I am operating. And this type of market cycle is fairly old. And let me show you another graph to prove that point. For example, this is the data between 2009 and 2018. So 2009 was a dull phase, right? And in these 3-4 years, the market did not do fairly well, and retail investors lost a lot of interest. And then when the market started running from 2012 all the way till 2018, there was a massive adoption of stock market by retail investors. So retail investors literally chase returns. When they start seeing a little bit of bullishness in the market, they will start throwing their money then, which is probably a bad strategy, and they will do the opposite. When things are available at a discount, they will not buy it. They will not learn about the stock market. They will become like extremely pessimistic. So please don't do that. In case you want to grow your money, you have to buy stuff in a down market. When everything is running, that is the time to cut some of your positions. So I will explain all these points on the member community tab. In case you are interested in joining it, please feel free to do it. I give a lot of stock market commentary there. I was supposed to discuss one more stock, which was HDFC Life, but unfortunately I ran out of time. This video will become really long. So I will probably make another video and discuss 3-4 more stocks next week. I hope you enjoyed this conversation. If you did, do press the like button, and I will see you soon.